The Toronto real estate market seems to be on quite some shaky ground right now, with so many uncertainties from the US threatening tariffs and trade war talk. There's fluctuating interest rates and buyer behavior changing constantly. But there's one thing almost nobody's talking about. The rest of it you've probably heard on the news, but not many people are talking about the fact that we're having such a low housing start, and housing starts have completely tanked from exactly a year ago. So in this video, I'm going to be talking about the impacts of that and what that means right now and what that means for the future. So stick around. My name is Sitzer from Teamster Real Estate. I help clients with buying, selling, leasing, investing, and everything to do with real estate in the city of Toronto. If this is your first time, please subscribe for all things real estate and the GTA. All right, let's start with what's actually happening in the Toronto real estate market right now. What's the general climate like? And if you look at the numbers that Trep's thrown out, that numbers that came out for February, they're looking okay in the sense of if you're just looking at the average sale price, it's actually gone up about just over 1%, which doesn't mean a whole lot. However, if you look at the, home sales in the month of February, there's been a 28.5% drop from exactly a year ago. So, when you look at these sales, oftentimes we're only looking at factors like supply and demand, but it's more than that, right? There's a lot of external factors that come into effect when we're talking about sales. And one of those factors is this uncertainty around the trade war and the tariffs that the US is imposing on Canada. So, consumers, they typically like to make decisions, especially big buying decisions like buying a home or making big purchases, when they feel confident and when they feel certain about the market. We're seeing the Bank of Canada did a rate drop recently last week, and that would indicate, well, rates are dropping. So historically speaking, when rates drop, demand goes up, we see a rise in sales. But we haven't exactly been seeing that over the past several months. And the big part of the reason for that is that there's been this uncertainty and lack of confidence. So if people aren't confident, they're not going to make a move. Obviously, people who have to move because of relocation or because they've had kids and now they need a bigger space, well, they're still moving. But the general population is not really pulling the trigger, and that's why we're seeing sales numbers fall. One of the things that's causing a lot of uncertainty is the prospect of people potentially losing jobs, right? Unemployment is a big factor when it comes to one of these external factors when it comes to real estate. So even though rates are dropping, and on paper, if you want to call it that, things look to be fine because rates are dropping, things should be more affordable. And we'll get back to affordability in a second here. But you would think that rates are dropping, things should pick up. But again, people are wondering, like, am I still going to have a job if Donald Trump goes ahead with 25% tariffs as promised on April 2nd? And it's that uncertainty that's making people not want to pull the trigger. Now, when it comes to the Bank of Canada's rate drops that we've seen over the last almost a year now, Bank of Canada's, I think, done about 7 consecutive rate drops. And they're doing this for a reason, because they've seen that, inflation had come down last year, and, the economy wasn't really growing, and so they needed to start cutting down rates. But they did an unexpected rate drop last week, which a lot of people weren't expecting, and that's because the Bank of Canada wants people to start putting money into the economy. The whole reason the Bank of Canada started raising interest rates back in the middle of 2022, and they did aggressive rate hikes, was because they were trying to get people to stop spending money because inflation was extremely high, and the prices of goods and services were skyrocketing and wages weren't growing. And now when they brought inflation up to the percentage that they wanted, which was around that 2% mark, they decided to start cutting interest rates, because then nobody was spending money, because the cost of borrowing, when rates go up, cost of borrowing is a lot. And that's why we saw homes sitting around and not selling, and the big price corrections that we saw in real estate is because people just weren't able to afford it. Even if they wanted to, banks weren't loaning them the amount that the sellers were looking for, and that's what caused a lot of the price correction. Obviously, demand went down as well, but that is the general gist of it. And now they're trying to do the opposite. They want people to go out and spend money. So, when you put that, 2 and 2 together, you would think, well, rates are dropping, people should be buying. But again, there's uncertainty, but also just putting uncertainty around tariffs aside and the economy and unemployment aside, things still aren't that affordable, right? When you think about the average price. The average price really hasn't, yes, it's corrected quite a lot since 2022, but generally the median cost of a detached home in Toronto is still way north of $1 million. And in order for people to qualify at today's rates, which is north of 4%, around 5%, people are still having a hard time because they're not able to show enough income to qualify for a mortgage that big. And you might be thinking, well, why aren't prices dropping like crazy? Well, people in Toronto, like most homeowners, they are quite resilient. They have a lot of equity. You probably see videos on YouTube where you're seeing these big, huge price corrections and, sellers taking a $300,000, $400,000, $700,000 loss from when they bought it. Yes, we have those scenarios, but they're few and far between. They're not the majority of homeowners that are out there in the city of Toronto or the greater Toronto area. So because of that resiliency in the Toronto real estate market amongst sellers, prices aren't really coming down because sellers are like, you know what, we'll wait and we'll sell it when the market picks up. Now, in order for the market to actually start picking up, interest rates need to come down even lower and prices need to be a little bit more affordable, one or the other or both. And BMO is actually projecting that they're estimating mortgage rates potentially dipping below 4% in 2025. So that's interesting. And I'm very curious, once the borrowing costs do start coming down, interest rates do start dipping below 4%, I do believe that we're going to start seeing this uptick in demand and more activity in the market. Remember, people that are looking to purchase, especially first-time buyers, and they have to go through what's called a stress test, which means they have to qualify at a higher rate in order to qualify to purchase. And that stress test is also causing a lot of unaffordability issues and people just not being able to afford. Although the bank did make changes back in, I believe it was November or December rather, when they introduced the 30-year amortization for first-time buyers. First-time buyers can now get their amortizations extended to 30 years. And if you're doing mortgage renewals, you don't have to go through the stress test anymore as long as your amortization stays the same and you're not, the loan amount is still the same. So if BMO's projections are right, mortgage rates dipping below the 4% mark this year, we'll see quite a bit of uptick in activity, particularly in the low-rise, freehold, detached, semi-detached townhouse area, which tends to be the most in demand, just shy of $1.3, $1.2 million mark. Now, here's something that a lot of people aren't talking about, and that is the sudden drop in housing starts that have happened from exactly a year ago. So in February of 2024 to now, there's been a 68% drop in housing starts just in Toronto alone. And Vancouver is trending second place, and then Canada overall has seen a big drop. But just speaking of Toronto specifically, a 68% drop in February. Now, this is going to have long-term impacts. Why? Because number one, because new home sales in general have completely disappeared off the market. When I'm talking about new home sales, I'm talking about pre-construction condos, pre-construction detached homes, townhouses, semis. Nobody's really buying those. And if you're not buying, builders are not going to build. And that's why we're seeing this sudden drop in housing starts. Now, this has long-term implications because by the time the next 2, 3, 4 years come around 2027, 2028, we're going to see this massive shortage of supply. And if all other things being equal, if there's no more trade uncertainty and if rates are low, that's going to create this extreme 2021, 2022 type of market activity again, where prices completely skyrocket. Now, LePage is forecasting a 5% increase in the Toronto's housing market year over year for 2025. I think that's a little bit on the higher side. I mean, I'm guessing it's going to be around 3 to 4%. I wouldn't be surprised if they are. LePage's forecast typically tends to be right on the mark most times, but if BMO's projections are right of the rates dipping below 4%. Again, all things being equal, then we could see that kind of price increase. Now, if Trump comes along and puts all kinds of tariffs on all the goods, and if he's, in some cases he's promising 50% tariffs, and if he goes through with that and we see a big unemployment rising in Canada, then things can change, right? Then regardless of what the rates are like, that could result in the opposite effect. We could actually see not just sales plummet, but also potentially prices trend downwards. Now, if you're a buyer in this market, my suggestion to you would be, depending on whether you're upsizing or you're just entering the market, or you're downsizing, right now is a great time to be looking at properties, because especially vacant properties, especially if you're a condo buyer, there's a ton of condo supply in the city of Toronto and GTA in general. We're seeing over 6 months of inventory, which means it's a big buyer's market out there for condos. Depending on the area, there's some freehold low-rise that is also sitting around. So it really depends on where you're looking. But in general, buyers do have the upper hand right now. I have seen cases where, some low-rise properties are selling in multiple offers, as high as 20 offers in areas in the East End and Leslieville. But again, those are one-off neighborhoods. But in general, if you just look at the overall macro perspective, we are sitting in the buyer's market. Now, if you're a seller, again, depending on whether you're selling a home, a freehold, or you're selling a condo, it's very important, regardless of what you're selling, to make sure you're priced competitively, and you really have to stand out in this type of market. Have the right expectations, have a chat with your real estate agent about the strategy that you're going to implement given your market and your property type. And of course, what your next move is. But if you're curious about your particular circumstances, whether you're a buyer, seller, or investor, click the link in the description below to book a one-on-one free, no obligation call with me where I can go over a custom strategy for you. Thanks again for watching this video. See you in the next one.